people that I did the instrumentals for that song myself and recorded it. But in reality, it's AI. Pete, Lester, SB, Jolene, Buck, Robin, Jean, Frank, David, hello, hello, Lee, hello.
Nate,
Morning, Dave and Wreck-It Ralph.
Rocket Ralph seems to be
Oh,
in the income machine.
well, congratulations. Hope you love it. We've been enjoying it and having a lot of fun in the master classes and all that good stuff. David, Mike, Estelle, Mary, Stephen, Jim, Samuel, Bugs is in the room. That's Todd. We got Sam and Lynn and Scotty. Awesome group today. Good morning, Richard. Well, guys, we'll get started here in just 1 minute because people are still jumping in like crazy right now. Uh, kind of an interesting agenda here. We're going to bounce around a little bit today. Graham is going to talk about the profit factor discovery we made. We covered this a little bit last week. We're going to go a little bit deeper on that and tie it to some specific examples and opportunities. How many were in here? Give me a yes in the chat if you were in here for when Graham kind of broke the news that profit factor actually isn't that important of a statistic. Just give me a yes in the chat if you were in here, because I'm still okay. We got a lot of folks, and by the way, a lot of you are chatting to host and panelists. You guys can chat to everyone if you want. You just click that little blue button right above where you're chatting, switch that to the word everyone, and that'll let you chat to everyone if you want. You don't have to, but if you want to. But okay, so we got a lot of yeses. Probably half the room was in here. Um, Probably one of the more shocking things that I've honestly found, because I'm a statistic guy, and I love the math in trading, and I was really pretty shocked to see that. And so, for anyone who hasn't seen that, I'm going to do a little bit of a recap there. Like I said, tie it into a couple specific, kind of strategy ideas. Um, I want to cover two trades that I like right now: Google and Apple. Good old boring Mag Seven uh, stocks that I like. And because they're kind of boring Mag 7 stocks, I'm going to give you more of a defensive income machine trade on them versus a super directional trade on them. And then, Graham, I have to share that the number one new money crew trade right now is ANET.
Oh wow, really?
So it keeps punching me in the face, and I keep going back to the well, and here I go again because ANET is ranked number one.
Hey, it's up today slightly.
Yeah, but I have $115 spread on it, so I need a small 17% move here in ANET over the next month.
That is pretty teeny tiny.
Yeah, but hey, we're going for the glory. 400% ROI. And then we've got Lance, Mr. Ippolito. Lance, I heard you had to evacuate your house today.
Yes. Let me see. I'm on my laptop. Hold on, I gotta find you guys. I
Wow.
never use my laptop ever. Hello,
Same.
everyone. There we go. Yeah, so I had at like 8 a.m. I had the termite guy come, and he's like, "You got the treatment takes 4 hours. Then you got to come home, open the windows, and then evacuate another 4 hours." So I'm out and not on my normal setup today. So I'm mobile. I'm on the go. So I'll probably be very light, and obviously the market's very light today too. But
Yeah.
yeah, I'm completely MIA just about. So if you guys don't hear from me much all day, you might hear from Rodney and Christian on Telegram, but I don't even have Telegram on my laptop. So I'm kind of handcuffed to say the least. But
Well, dude, you're like me because I'm useless on my laptop. Every time I go down to Ponte Vedra and I have the laptop, I'm like, don't expect me to get any work done. This is just brutal.
it took me like 10 minutes to log in because some Apple sign in with some old email. I don't even know my Apple ID. Like I use the Mac, the Apple, the Mac, nothing. So I'm completely useless on it. I bought another screen to use, but I don't know how to set it up. I'm like an old man with this with the MacBook stuff. So yeah, I'm not even getting frisky today. It's
Plus,
no.
the market's just squeezing. Oh, Joseph V. Joseph, I was meant to look for you today because yesterday in Income Machine you were asking about Amazon, and then you sent me the email asking about Amazon, and I was digging through my charts trying to figure out what Amazon trade you were asking. It turns out it was Graham who gave the Amazon trade, not me, and that's why I had no clue where to find that trade. So, Graham, Joseph's question was if you had a target or if you were going for a full profit there.
I have a partial target on, and then I have one left on for a full profit. And I just posted in Telegram, did get a bullish entry today, which I was shocked because, like Lance said, it's a pretty dull day in the markets. But on Amazon, my profit target is at 165 on that spread, which I
Perfect.
believe, I don't want to misspeak. Let me tell you exactly what that was. That was about a 50% move on that one.
So Lance, did I tell you? I don't think I did tell you. We're launching the new Money Crew e-letter today or tomorrow. Did I tell you that we actually hacked your news flow scanner for the tool?
No, do I get a commission off of it?
No, I hacked it and gave it away for free.
No, yeah.
No. What did you
Dude,
do?
look, we built this. This is one of the coolest tools we've ever built, I think. Check
Hold
this
on.
out. I didn't even tell you this because I figured you might complain, so I figured I'd just launch. So this,
Hold on. I
what it
gotta
does.
find this. Hold on.
Oh, you can't even see my
Oh, there it
screen.
is. No, well, the laptop's so small. Look, I just found a watch list. Oh
Hey,
my God.
first of all, look how good we look. That's number one. Look how nice we all look together here. Number
Okay.
two, what this scanner does that we're giving a snapshot away for free is it ranks things based on stuff that I like, stuff that Graham likes, and stuff that you like. So it takes my trend and weekly breakout, takes Graham's seasonality, and we stole stocks that only have hit your options flow in the last 2 days. So they have to hit that to get a perfect score. So we basically hacked your tool and gave some stocks away. Hope you don't mind.
No, just send the check in the mail. I just, you made me, I just found my watch list and all the cruise liners and I found all the stocks up today. So if anything, I just got my watch list now. So that's good.
What's your watch list?
Oh, it's all my junky stocks. So like,
Oh, like your CCLs and stuff.
yeah, like it's NEE. We saw a big call buyer yesterday in that one.
Mm-hmm. We have an
The
NEE trade on.
Yeah, it's a good one. The utility, uh, CCL, RCL, the Robin Hood, MGM, Vegas, Amazon just went green. Murrah, Nvidia, Wynn Casinos, Take Two Interactive. It's a video game stock. Uh, the RTX, ISRG's up 10, and Goldman Sachs. All
I
I
like
know. And then some of
you're
the
going
small
from
ones
cruise
too.
lines to RTX and Goldman Sachs in the
I
same
mean,
in the same
yeah,
list.
they're all highly shorted stocks,
I
They're
gotcha, gotcha,
that's why they're junky. They're not like
gotcha. Okay,
Apple or I don't know, like Pfizer or, boring
yeah,
companies. They're all pretty pretty momentum. Wow, Nvidia's up $2. There was a good call buyer in it yesterday too.
yeah. Um, well, for those of you asking, so this is the new Money Crew. This is the thing we launched just so that we could have an official place to do some stuff for the three of us, some trade ideas, some newsletters, an easy way to find where our events are, all that kind of stuff.
Oh.
And because, like I said, we're trying to ramp up the free content. Obviously, all three of us, proudly have services and products that we want you guys to join and be members of, and make no apologies for that. But we also want to really ramp up the free content and what we can do on the educational side. And so we built this little brand. And for those of you asking, how do you get access to that? You should get an email like today or tomorrow that basically says, hey, New Money Crew is now available. One click of a link, and you're going to get free access to the site and the updated scanner. And you'll be seeing more of these beautiful three faces. If you don't want to see more of these three faces, do not click that link because you will then, if you click that link, you'll get all the New Money Crew stuff that'll have, our faces all over and what we're doing and more opening playbooks and crush the closes and all that good stuff. So
Nathan,
you'll
am I still having my Lance Ippolito trading thing?
Well, yeah, you still have your separate thing. This is just the bonus new money crew.
Well, obviously,
Like
like
your
I don't write
phantom.
my own stuff, gang. You know me. I don't even know how to type. But the stuff that goes out, it goes
Yeah.
into my spam email anyway. So, but is Sean still writing that?
Oh, you no, okay? I'm not even gonna get started. I'm not gonna take the bait, but yes, you still have it. Okay, let me go back to this real quick because I have to actually give I have to actually give trades because I promised trades.
Okay, yeah, I want to hear it. Give me some stuff I could do on my Robinhood app because I can't do this laptop. I can work Robinhood. So
All right. Well, I'm gonna do Google and Apple, two boring Mag 7 stocks that I like. And I'm going to give you these more defensive trades, going 15 to 25% type ROI. So neither of these are super high rated, but I like them anyway. So that's why I'm going to manually look for them. Now, when I say highly rated, I mean, I think they're good opportunities, but they're not highly rated based on my 5 criteria for the income machine, because what we're basically going for there is pure momentum. And Google and Apple are actually both lagging behind. So they're not pure momentum. They're not NVIDIA. They're not Microsoft. So 3 out of 5 here. Let's go ahead and see what we've got on good old GOOG.
is this Goog or Goog with the L?
Well, I did Google. I did Goog without the L, but obviously you can do either one. Oh, I did Google. I did. See, I don't even know which one I did. I did Google. Here we go. We've
Okay.
got 18% ROI over the next 22 days with a pretty nice cushion here, about 6% cushion. So Google can go down 6%. You'll still make a nice little 18% ROI. I'll pop this one.
Oh, what expiration is that?
There you go. Look at that. Automatically printed right out there for you. 725. All right, let me see.
Well, hold on.
We got to check our prices here. Hold on. Let me check.
Well, I have a very important question,
Okay, ask your very important question while
and I
I'm
think everyone in the
confirming.
chat will probably ask this. Does that expiration get Google's earnings? Because a lot of these names do have earnings upcoming in the next few weeks. So
Well, yeah, see, but I like trading a lot of these with earnings because you get a little extra juice on those options. On these defensive trades where it's baking in that earnings volatility, those are a lot of my favorite ones.
yeah, but Google, here's the thing. So, and if you're listening,
What is Google's earnings? Are they
22nd?
722, I think? Yeah,
Yeah.
July 22.
so you get earnings. So here's the thing, though, and this is what you should be asking if you're on the chat. What happens in the worst case scenario? What is my max loss if doomsday does happen? Because you do have, and if you trade earnings, I know Graham does these, and he limits his risk with the spread, which is smart. But you should be asking yourself, let's say Google goes down 10% on earnings, right? And that might be a 1 in 200 chance, right? What is my max loss? And if it is not, let's say, great, can I pick a different expiration? Or should I just avoid Google because of that earnings event and move on to another stock?
Well, Lance, I'm glad you asked what your max risk and all that stuff is, because it's all baked in here into the income machine. It tells you based on how many contracts you want to trade, what your investment is. And the way that I do pretty much everything I trade is debit spread. So we all know the debit spread, the most you're going to lose is what you pay for the trade. Unless it's in between strikes at expiration, then you want to go ahead and close it manually. But right here, if you want to trade 5 contracts of Google, you're going to put about $2,100 up to make $390, about an 18% ROI. Now, one of the things that I like doing, so this is a whole can of worms that Lance opened up that I'm going to jump on and go down the rabbit trail here.
Okay.
I like using earnings. One of the ways that I like using earnings that I think is undervalued is like a get out of jail free card on earnings. So what you do is you trade like a vertical spread, something like this, or you could do like a more aggressive spread. So you could do something on Google around the current price, a 175, 180 spread, right? Everyone following, you do 175, 180 spread right around where Google is now. And Google has earnings in 20 days. So you use that July 25th expiration. Then what you do on that spread is if you can hit a decent target, so you can get 60, 70% out of it, you set that target ahead of time so that if it hits the target before earnings, you make the money. Get out of the trade, make the money. A lot of times stocks do move up before earnings, especially big names that people like. And so you get out of the trade with a profit if it's ahead of time. But the cool thing is, let's say the Google is down between now and July 22nd, and now this spread is down 75%. Well, in that case, you just keep it open and you use earnings as a potential coin flip, get out of jail free card because you have a spread. You don't have a regular call where now it has to overcome, the first 5% that you're down plus the implied move. You just have a line in the sand at $180. So now you're down 80% on the spread on July 21st, and you still have, close to a coin flip opportunity to get back and win the trade if Google beats earnings. So this is something that I actually think is a nifty little way to use earnings. Try to get out and hit your target before earnings, but then use earnings as kind of your last ditch effort. As long as you have a risk defined trade where you're not going to lose more by holding it, you can use it to try to get back on the winning side. So that's another way that you could trade Google. Although I wouldn't recommend this trade because this is more of a defensive, lower ROI, 18, 20% ROI trade. If you want to use the earnings get out of jail free strategy, you need a little bit more aggressive trade. So anyway, that's my rabbit trail on that. Okay, let me look at Apple real quick. By the way, when is Apple earnings? I don't even know when Apple has earnings either.
Apple's usually a little bit later. It usually starts with Netflix.
Let's see.
Then you usually have like Intel, IBM, or Intel.
31st.
Yeah,
Okay.
the following week.
All right, so we can look at the July 25th and be inside earnings here. By the way, I wrote an article yesterday, but it won't get delivered until today about why I really like Apple. Apple is up 2.3% today, so I really wish that it got delivered yesterday. But you'll see it today. If you guys are on my kind of newsletter list that comes from me, you'll see my explanation of why I like Apple, and it's not because I think they're going to invent some new AI technology or anything else. I think it's because they're going to do what they usually do. Pick up some, already existing AI company, which they've already started doing, and then just polish up a product and use their massive customer base to, boost the revenue and have a good quarter despite, the fact that they're way behind on the AI development and all that kind of stuff. Okay. Apple, here we go. We've got July 25th. Now, this one is outside of earnings, as we just mentioned. Jimmy, I think you are the only one who's just seeing the top of our heads. I think you might have to adjust your screen view. This one, you get a little more bang for your buck there with the 200, 205. You're still about $7 below Apple. So you're still about 3.5% below the current price. And you can make about a 23% ROI. Really wish I would have gotten filled on my Apple trade yesterday. I didn't get filled, and it's up 2.4% right now. So kind of annoying, but I still like 200, 205. If you want to be really safe, I think that below $200 number is, a really protected trade. I think Apple's going to do its very best to stay above 200. You can see here is what I shared yesterday. Lance, I know you love a good monthly chart. You're a big long-term monthly chart trader. So I shared this monthly chart yesterday, and I think Apple looks great on the longer term from a technical standpoint. And it's not going to be a one-day trade. I'm not looking for Apple to bounce 1% tomorrow, but I think it'll grind its way back up. Here's kind of a midterm trade that I just shared. 23.5% ROI using that 200, 205 spread there. You can get in actually for a couple pennies less. You can get in for about $4 right now. So let me see if I can get in on this one.
Nate, I actually made Apple my top holding yesterday.
Did you really?
It was out of my portfolio for a while.
Oh, see, Lance and Jack and all these other guys have been bashing Apple. We're the only people.
So for a while.
What did you do? Did you buy stock or options?
Yeah, stock.
What did you buy it at?
Trade most likely tomorrow, unless the thing tanks overnight, which it would have to fall about 2%, 3% tomorrow for me to.
All right, boom. I am filled. So I got filled for 4 instead of 405. So if I just drag this down and tell the income machine what I got filled at, you can see it automatically adjust the numbers. I did 3 contracts. So go 1, 2, 3. And I have invested $1,200 for the potential to make $300, a 25% ROI. Lots of green down here means most of the scenarios are profitable. And I'm happy to make 25% ROI if Apple does a whole lot of nothing before earnings. So that's the Apple trade. If you want to put a target on it, you could put like a 475 GTC target on it. And then if it pops, has another 3% day, you might get out early. But there's your Apple trade.
I will say Apple, I mean, this is a huge move for Apple. Not only today, I mean,
I know. Yeah.
an example, a 2% move in Apple is like a 6% move for Nvidia, or like a 5% move, maybe even more, for Tesla. I mean, the Apple July options are up 60 to 80% today. And
Yeah,
then,
on a 2% move.
yeah, and then
I know.
what was it, Monday on that AI news? I mean, that had to be like the biggest intraday move in Apple in probably years.
Apple's been sluggish. By the way, did I give the Tesla trade yesterday? Did I do the Tesla trade live yesterday? I did. I tried to grab Tesla pretty close to the open yesterday, but I don't remember if we did it in opening playbook. Just kind of traded the July 3rd expiration. Do you guys
Nathan,
have that one?
you sound like Joe Biden. You say something and then you forget 1 minute later.
I honestly have no idea if we did that trade. Uh,
Your handlers to let's get your handlers to see. Did he,
this
gang?
one, this one, this is
Yeah,
just
you
the
did. You
302,
did.
305.
You did. You did. Good job.
I
Yeah.
only did three contracts or five contracts like a loser because it's such an
Oh,
obvious trade. But
man.
we got the pop. So guys, I'm gonna hold it till expiration. I think. We only have one more day for expiration, and hint hint as Rodney shared and confirmed by ChatGPT, July 3rd is the most bullish day of the year. So
Oh, really?
It is. Yeah, look at that.
Wow. That's
which is
his.
why we'll be looking forward to our overnight option trade tonight because hey, tomorrow's the most bullish day of the year.
That's awesome. It's the what do you call it this morning? The Bull Put Credit National Holiday.
Oh yeah, I saw that. What do you think? I'm curious. What do you think the move between now and tomorrow, market closes at what, 1, is in the market? Anyone want to have a guess? We're 5 points up today. Between now and tomorrow, so overnight, it's it's about 40 points. So the market's looking at basically between now and tomorrow morning, less than 0.5%. That's pretty
You
wild.
talking about the expected move right now between now and yeah,
Yeah, tomorrow.
yeah.
So they're basically implying the market does zilch, nothing.
Maybe they don't know about ChatGPT saying that's the most bullish day. Maybe we should go all in on
Yeah.
call options above the expected
Yeah.
move.
Yeah.
Especially the Nasdaq. Nasdaq lagged yesterday. Today it's the strongest. I know. Probably because what, Apple, Tesla.
I was going to ask because financials aren't down that much. Normally, when I see SPY lagging that much behind the Qs, although it's catching up a little bit here, I think XLF must be down 2% today, but it's really not. So I guess it's just Apple Tesla yanking us up.
Yeah, that's really it. I mean, oh,
Mags are up 1%. Yeah, that makes sense.
yeah, that's a good move for them. They've been kind of light lately, or light yesterday, not lately. Yeah.
Lance, here's one a fun one for you. We did Robinhood, or I did Robinhood. Told people about it in Telegram and here in the opening playbook. Obviously, it had a big fade yesterday after a huge open.
Yeah.
But look at it today, up 6.5%. And Lance, you're gonna love this. You're gonna say, "Where's my check in the mail?"
What
Let
is it?
me go find my Telegram.
I sold Robinhood at 50%.
The thing's just amazing.
Yeah.
Take a look at this.
Yeah, the flow's been nuts.
Borrowed this from Lance. I
Yeah.
mean, that's just
We're
insane.
we're just stealing all Lance's stuff here. I love it.
It's
But that
it's
wasn't the reason that I bought it. But then I just so happened to see that later in the day and said, "Oh, that's cool."
yeah, I mean, they're playing for the move to 100, and yesterday it got to like 99 and change, and then it sold off 10%. So they're
Yep.
just, they'll probably pump it tomorrow when no one's watching it over 100. Yeah, it's a
I
big
know.
round number.
Chad, what strikes do you have on Morgan Stanley,
Morgan.
which is still up today, even with financials being down? Love those highly rated stocks.
Oh wow. Yeah. I haven't seen that one in a while.
Oh, you have one. Wait, you have 141, 142. So you took a directional. I thought you meant an income machine trade. You took a directional trade on Morgan.
It's in the money.
Oh, 141.70. You know,
Oh, Nate, your ANET's gaining steam.
Yeah, because I have hold on, let me see what I have here. I have 126, 127 Morgan Stanleys. So I'm pretty deep in the money.
Got a question here about Costco from Patricia. I like Costco long term. I think right now we're just seeing a cool off in the more staple stocks as risk on is returning to the markets. And it sounds like we're going to get some semi arm twisted forced rate cuts here over the next year. So that's why we're seeing a lot of things like look at the small caps. They're popping today. They popped yesterday. They were up huge in the pre-market as well.
Yeah.
Stocks like Costco, again, really great, sound, solid stock. It's probably just not catching the new money coming in. That's all about the exciting stocks like Robinhood or other smaller companies as well.
Yeah, exactly. Yeah, there's rotation into junk right now. So
Mhm.
like AI stocks, quantum stocks, crappy retailers, basically anything with a high short interest. So like good, safe, quote unquote, good fundamental stocks, they're not moving up here. They're stocks that pay like a good dividend that are usually like to safeties. They're all getting crushed.
If you guys want a fun one for you, and this wasn't my, I wish I could take credit for this. This wasn't my own thinking. I've got a buddy who works here with us. His name's Dave, and he is absolutely obsessed with everything crypto. Um, he's been talking about Mara and CLSK and Bitcoin for the last 5 years, talking my ear off. He did just tell me about this stock, and this is a total gamble here. I threw my whole entire retirement account into it for fun. Like,
No.
oh yeah, total gamble. Bought it here. He told me Cypher, which is a
Yeah.
mining company like Mara or a CLSK, is making a pivot in how they're doing their business model. So they are obviously Bitcoin miners have to run these huge data centers, run them very efficiently to bring the cost down as low as possible to mine Bitcoin. Well, they've decided with this AI craze, they're going to pivot their model a bit into selling data centers for the big AI companies like Meta, Google, Amazon, Microsoft, you name it. And so that's why we're seeing some of these names catch a bid, like Cores. Look at Cores with the potential buyout. Iron has been another one, but Cypher is the one that my buddy, again, take it with a grain of salt. My buddy said this one hasn't caught up with the pack yet. So he bought a bunch of calls. I bought a bunch of shares, 18 or 1,500 shares of Cypher, and so far letting it rip. We'll see what happens here. This is a very, very speculative play. This isn't my next Oklo. Oklo I thought was pretty much surefire, really great stock, should squeeze and go higher. We made some good money on that. This one's more of a dice roll. So I'm riding with Cypher right now for fun. Lance, you should appreciate the junk here.
Oh yeah, yeah. I just caught a buyout in one of those little cryptos, thanks to the news flow scanner and cores. Have you heard of that one?
Yeah, that's the one. That's the
C-O-R.
other one he bought. He bought this one,
Yeah,
Coors.
I did very good in it. I bought calls and then like 10 seconds later they got halted. Bloomberg reported a buyout deal, I think by Circle, and the shares gapped up like 20%. So the calls went
Wow.
up like 400%.
Yeah.
So make sure you get my news flow scanner, gang. If you don't have it, I mean, we did UNH yesterday live, 30% in like 5 minutes, yesterday afternoon. So like, really, really solid alerts. If you guys want it, just I don't have a link or anything, but I would just call in and get it.
Yeah, definitely. That's exactly what I shared too in Telegram.
Yeah.
Um,
Physically can't send out obviously those trades, so the scanner will give it to you in real time, so you can do it, and it will tell you the exact details.
Now I told you guys Monday morning here in Opening Playbook when Robinhood was at 88 bucks that I was going to hit 100 before seeing a pullback. And today is Wednesday, 2 days later, and we're 50 cents away. So we'll see if we get there.
Yeah, yeah. All right, I just sold my Tesla from yesterday, about 50% overnight.
Nice.
I didn't sell. Do you think I should sell mine? I still have. I was going to hold this till expiration on those 302, 305s.
I'm gonna hold some calls and earnings. I'm trying to get them to send out my Tesla alert.
Quick
Uh,
question for you guys. Did anyone take the 60-minute income trade this morning I posted in Telegram. I had my top notch assistant Florian also helping me out since obviously I get on here at 10 a.m. He's got the full system, keys in hand. Anyone take that this morning? Couple yes. Yep. Yep. Well, I don't know about you. I'm already up 40% in about 25 minutes. Can't complain. My target's 50%. Oh, wow. The XSP is just sitting at 50% now
Yeah.
on the options.
Well,
So,
not to one up you, but overnight option just got filled, so
oh, you beat me.
we're already at our target, Graham. I don't want to
You beat
throw
me, Nate.
shade or anything, but uh, let's just
Yeah.
as soon as Graham tries to talk about his trade, let me just come over the top and say, who got filled on overnight options,
Yeah.
guys? Give me a yes in the
Hey,
chat.
it's good. We got winners across the board today. You, me, and Lance.
I almost feel like everyone should run and buy VIX calls because the market seems too easy. And when the
Yeah.
market seems too easy, it's usually doomsday about to happen. So I'm actually going to hedge, and I'm actually going to buy some VIX calls here. There's too much euphoria. Is there any decent fills? July monthly VIX calls.
Do you trade the actual VIX or do you trade SPXY? What do you usually go with?
So if you do the VIX, you really have to do out the money calls or call spreads. It's just the UVXY and UVXY. They're very illiquid. I mean, they're really, really bad. Like it's really, really bad. So I'm probably going to do the VIX July monthly, so July 16th. Let me price out a call spread. Maybe like the mm, see if we buy the 17 calls, they're 187. Can sell the let's say the ooh, God, this is a horrible ROI. You could sell the 20 calls for 77, so you pay like a 110 to make $3. That's not good. All right, oof, that's a horrible hedge. Maybe the 1819. Just trying to find something that you could like double or triple your money. Yeah, I mean you could do the 1819 call spread for 33 cents. So, max profit's a buck. That's not horrible if you get a big VIX move. It's a cheap hedge. I'm gonna do a couple contract. I mean,
You're
maybe
saying UVXY?
Joseph, it's 616, 617, by the way. 616, 617.
718. No, I did the spot VIX July 16th. I mean, it's a cheap hedge. I just think you need a hedge here. I mean, there's too many. I mean, or you could just do here and make it super easy. Here, just do a super easy trade. You could do.
Do you want the screen, Lance?
No, I'm on the laptop. I really can't,
Gotcha.
show it. You could do SPY July 18th. Let's say the 615 puts. You buy the 610 puts. I can't do crap on my laptop. Yeah, I mean that's a good here. You do this. You do the SPY July 18th, 615, 610 bear put spread for $1.35. I mean that's a good ROI. You risk a buck 35 to make $5.
Which one was that?
So I did the SPY
Uh-huh.
July 18. I'll type it here. 615, 610 bear put debit spread at
There you go.
1.5. I just typed it in the chat. Yeah, sorry I can't share the screen.
You get about 200% on those, right?
Yeah, I mean, sell half at a double. So maybe what, 270?
And the crazy thing, yesterday I went through my market analysis. I told you guys we need some sort of pullback. Oh, there we go. Filled on the 60-minute income trade for our 50% target. This trade, Lance, is really nice. It's only a 1.5% move on the SPY.
Yeah, I mean, that's what I mean. I mean, just some kind of cheap protection. You know what I mean? Like,
Yeah.
you don't have to, again, you could either do nothing now and just let it ride, or If you're like, hey, if if you're long in the tooth and need some cheap hedging, I mean, I don't really have any positions on right now. I'm pretty flat. I had like 12 positions yesterday, and then I closed out of most of them. But yeah, I mean, I don't think you need to get crazy. So doing some cheap hedging in case, some trade deal talks or, some stuff like that happens, at least you have some protection where you're not going to get a big, big hit. Uh,
Hmm.
oh, shoot. He sent the wrong alert. No. Oh,
Uh, Graham, you didn't put those trades, Apple and there,
no.
You
did
gotta
you?
send those. You gotta post those puppies in the doc. We're gonna have a
Okay,
bunch.
yeah. I forget that we have the doc every time.
Guys, if you we made a doc. Let me just show it to you. Nate's
Here.
gonna update it now. We made a members portal for the opening playbook. The opening playbook's a free show every day at 10 a.m. However, we send a lot of trade ideas, do a lot of different trainings, build scanners for you guys, all sorts of stuff. And it got kind of messy for people they were asking, hey, can you share that scanner from 2 days ago? And I would have to go scramble to go try and find it. So instead, we just made a members portal for you guys. So one of the cool things in the members portal is you can see all the trade ideas we talked about that day. And let me just show you because there's so much more in there. Again, this show is free, but if you want to have access to the members portal where you can access uh, the recordings, the trade entries, get a template trade tracker, the slide decks, calculators, some of our teachings, and so much more, including scanners that we've built for you guys. We built this for you guys, and it's very, very expensive, as we like to joke. It's $1 for lifetime access. So if you want to have everything organized in one place for yourself, highly recommend getting in on that $1 offer. Again, the show will always be free. That is our intention. We had to charge something to get this lifetime membership in the members portal, but there you go. If you guys want the $1 members portal, it's a one-time charge. Hopefully, the best dollar you ever spent. I don't even think you can get things for $1 at the Dollar Tree anymore, but you can here on the opening
Yeah.
play.
I love the Dollar Tree. I think one of my kids, this was like 2 years ago, wanted to go to the Dollar Tree and spend, $10 for like a 5-year-old birthday. They're like, I want to go, pick. I was like, oh, well, that'd be kind of fun. Go to the Dollar Tree. I'll give you $10. You pick 10 things. Turned out they could pick two things at the Dollar Tree for $10. I
Yeah.
was like, what is going on here? But that's life. By the way, I think it was Dave. I think it was Dave, or no, actually, I think it was Doug. Doug from yesterday, your SLV trade that you spotted there, looking pretty good. I'm up, I don't know, 5 or 6% in the early days, and SLV is looking pretty decent. So, nice find there.
Yeah, if you got the Tesla alert, I had my analyst send out. It's not exit both. It's only exit the trade we did yesterday, which is up about um what is it, 40, 50% right now? About 50+% overnight. So you're not exiting both. It's only the calls we bought yesterday, which they're up about 20 points. The stock is so look to close them. I got on at 880 and just sold them at 14. It's a big gain. But yeah, and then we'll keep the balance for the earnings. Wow, the VIX just collapsed. All right.
Hey, I'm gonna post something in Telegram real quick just to brag about our recent winner. So just give me a minute, and then I'm gonna take you guys through a little shocking lesson that we had earlier this week. And Lance, I think you might be interested in it too, because I've never heard anyone talk about it before.
Excuse
But
me.
we'll talk about it here. So just give me a minute, and then we'll be back. Let me just post in
Oh, I
Telegram.
just realized too, I still had some AdB puts left over that I didn't get out of at the lows.
Healthcare.
I got too many. No, not AdB, Adobe,
Uh,
AdB. Um, shoot, too many trades open, not paying attention.
I know that's what happened. That's why I had to close out a lot of stuff because with the traveling and trying to train Christian, and you got me doing so many darn webinars, I can't manage anything anymore. uh Tesla's really the only thing. Tesla and S&P. really the only thing I like. Everything else is just, man, boring.
Oh, Joseph, you got greedy. You got greedy. You went for that extra penny. No, I'm just kidding. Uh, good
Bulls.
job. Got the fill there. All right. I think everyone should be out. Another nice trade. I just need Adby to drop another 20 cents and get out here.
Oh, look,
Um,
Zana had PayPal. You know what? You want to know about my big loss in PayPal? I bought PayPal in a structured note a long time
oh,
ago. So I
how
needed
much
it.
how much room did you have?
I had like 50% to get like 30% return annually. So I
Oh,
did it at like, oh man, you have to go back in time probably. And I think it was a 3-year note. So PayPal was $300. Now,
right.
I think I did it when the stock was like 150. Okay. So I was protected all the way down to 75. Well, the note ended and all that jazz, and it was like at 60. So I had the stock, and then it went to, I think, 67, and I got out. And then earlier this year, I think it was like $90. And I was like, crap, I would end up making money. And then a few months later, it was at like 55. And I just look now, it's at 76 and change. I mean, that's pretty insane
Yeah.
to see. And it just it was a same thing happened in super micro. So what the banks will do on these very volatile stocks is they'll give you a structured note, which is a debt product, and they'll guarantee you like 25, 30% annual return. Basically, what they do is they sell premium and they charge a bunch of fees. But as long as the stock doesn't drop, usually it's like 40 to 50% the barrier, you get your coupons. You get your if it's 30%, you'll every quarter you get what is that? Like whatever 30% divided by 4 is 15. Or not 15, 7.5. And then Super Micro, went all the way down to like 17. It was going to get delisted. So I would have lost. I think I did 40 grand in that one too. I would have lost all my 40 grand. And now it's what, almost 50, or was 50 the other day. So I'm like right on the borderline right now. So it's like a coin flip for super risky stuff.
Yeah. Well, you wouldn't think it'd be a coin flip if you had 50% of protection, but I mean, I guess Super Micro on PayPal. Sure.
Yeah, they gave me one in Palantir earlier this year, which was 40% with like a 33% annual return.
Mm-hmm.
Obviously, like Palantir's went up a lot, but looking back, if you would have just bought the stock, you would have done better uh than the stock's up more than 30% this year.
Yeah. Yeah. Well, cool. There you guys go. Once you've really made it like Lance, you can get into structured notes. Um,
Yes, it's
well,
only for I think they're called qualified purchasers. No, accredited
you
investors.
got to have the accredited, yeah, up to 2 million plus liquid net worth or whatever.
I wish we could give you guys private markets like SpaceX and OpenAI and stuff. That would be fun, to get allocation for that stuff, but there's so much regulatory hurdles with that. But that's market is going to be huge. So what you should be doing uh is look at some of these new IPOs that come out, like CoreWave, Circle, because that market is just going to explode uh with the demand for growth stocks that we're seeing, and that you're seeing kind of the old school Mag 7 companies not do much. And what's happening is a lot of those like cryptos, like Graham was talking about, like the ciphers and core science, the cores and stuff, all those little stocks, that's what they're buying because they see growth in those companies. And that's what's going to happen in the IPO market. I mean, look at Robinhood. Like Robinhood's a prime example. Um, those kind of what I call junky stocks where there's horrible probably balance sheets now, but in the future, kind of like at Amazon when it was a bookstore, that's kind of the new wave of the market is they want to find the next Tesla, the next Microsoft, the next Apple, the next Amazon. So instead of buying these companies at crazy multiples like, Microsoft or Google or Amazon, they're buying the companies that can, like, kind of think of Apple, Amazon, Microsoft like 10 years ago. That's what is kind of going to be the new wave of stocks, is like what's the next Mag 7?
Yeah, one of the things is as that market gets more active in the private market, hopefully they'll get more competitive on the fees and stuff too, because you're paying so much on the fees and the
Oh,
upside.
yeah.
So hopefully some more competition there will, get that a little bit lower. But well, hopefully you guys have enjoyed. We kind of like a little bit of a hodgepodge session today. We are going to get into our more of our typical training here with Graham, and he's going to cover this profit factor thing, which I think is
Yeah.
pretty shocking stuff. But hopefully this was a little bit fun, a little change of pace. We didn't get right into the meat and potatoes. Got to talk about a lot of different topics, and um, we'll kind of shift gears now, Graham. If
Yeah,
you want to jump
I'll keep it
in.
quick. This one a little bit longer than I anticipated this morning, but it was good. I think we made some money.
And
That's
and
fun.
and after done, we're gonna give them a chance on overnight options one more time before tomorrow's trade and the most bullish day of the year.
Nate, only because tomorrow is the most bullish
Okay.
day of the year, will we give him a chance to jump in on the next overnight option? Just curious in
All
the
right.
chat before we do that, did anyone here get in on that overnight option, which did hit the target before I did this morning on my 60-minute income trade? Yes, yes, yes. Lots of people.
And what
All
what,
right.
what ticker was that? Or what did you do?
It's the overnight trade on SPY, at least almost always on SPY, and basically it's a super high hit rate, one that I'm just trading. It's similar. I mean, it's kind of similar to what you do, trying to trade within protection of that market maker move, but on the overnight move instead of the intraday move.
Yeah, it's been good too, because the overnight move has been pretty, I mean, not much.
Boring. It's been boring.
Yeah, yeah, it's been very
Yep.
boring now. Yeah. So
Yep.
you really don't have too much craziness. So all that kind of stuff, like, it still feels pretty wild to wake up and the market's like, oh, the S&P futures are up 5 points or 12 points. And it's like, really? Like, is
Yep.
that it?
Yep.
So low VIX is very good for that.
Yep.
So now I have a question. I know some of you were here earlier, but this is so shocking. I want to do it again. And a lot of people said no, they didn't get to see it. And Lance, I know you didn't get to see it. So I have a question for you. Which trader makes more money? Trader one with a 99% win rate or
I already
trader
know
two
this.
with a 60% win rate?
Hold on, let me pull up my Zoom. I want to see
Post
some.
in the chat, guys. Trader one or trader two. Sam says can't tell from that. Josh
Wait,
says it's
Trader One
correct.
is 99% win rate. Trader Two is 60%. Can we have Trader Three at like 40%?
Yeah, I'll do that one
I
next.
picked
Well,
that
the
one.
truth is, you don't really know because win rate doesn't mean
Oh,
anything. But now, Lance, let me ask you.
Oh, now is the
Trader
question.
one has a 99% win rate and a 4.95 profit factor on his trades. Trader two has a 60% win rate and a 1.5 profit factor. So which trader makes more money at the end of the day? Trader one or trader two?
what I don't, profit factor, I'll probably get in trouble for saying this, but I don't, you know,
Which one makes more money?
I'm Trader Two. If you have a 99% win rate, when you lose, you're gonna lose your shirt.
So to get that profit factor, trader one has a 5% average winner, but trader two has 100%. And when you do that times their win rate, including wins and losses, the average return per trade to get those stats, 99% win rate and 495 profit factors, 395 a trade versus trader two, who has this really ugly, or so we would think,
Yeah.
ugly looking profit factor, okay win rate. He's getting way more. If they both take 100 trades with $1,000 each, same style, same investment,
Yeah.
look who makes more money at the end of the day.
And
Trader two.
why is that, Graham? Can you
We
explain?
tried to trick Lance the profit factor, but he didn't fall for it. Well done,
Yeah.
Oh
Lance.
yeah, I
So
don't. I every time I see profit factor, I think, all right, this is
Dude,
yep,
I totally believed in it. I totally thought it made perfect sense until like
I did
last
too.
week.
I did too.
it's good
Until I looked into it.
for back testing, but in real life, that's why when people say like most day traders lose money, even if you win a majority of the time. Like, Graham, I'll let you finish because I wanna know more about this. But I was at the car dealership yesterday, or not yesterday, this week, the other day, Sunday. Yeah, Sunday. And here's a funny story, gang. The car salesman, I'm looking at the Mustang GT, right? I wanted a V8. I wanted to, have a little fun, get a little toy to drive when I go to Jacksonville, the office, and cruise down Ocala horse country. You know, I missed the V8, and I sold a few vehicles. So the guy, he's got a Bitcoin on his phone background. Younger guy, he's got like a Bitcoin thing. And he goes, "What do you do?" And I tell him, he goes, "Oh, really?" He's like, "I used to day trade crypto stocks." I go, "Really?" He's like, "Yeah, I used to scalp like 1,000 shares of Riot and Mara." And he's like, "There's arbitrage because Bitcoin would move, then I could trade the stocks would move after." He's like, "Yeah, like I would do that and just do like 1,000 shares aiming for like 5 cents." And he probably had, like what you said, Graham, a high win rate, right? And maybe even 99% with a decent average winner, maybe 3, 4, 5%, right? But at the end of the day, just like your stat shows, after 100 trades, maybe it was 3,950 bucks, but I guarantee you, after commissions and the trades he lost, and let's say totally went against them, very, very hard to do that. So that's why I think Trader 2 makes so much more money. But go ahead.
Yep. You are right. So after again, 100, they each took 100 trades. They each put $1,000 in each trade. Trader one makes almost 4 grand. Trader two makes $20,000. So how can that be? Well, the truth is, and this is the shocking thing, profit factor and win rate both mean absolutely nothing. They're fun looking stats. They
Wow.
look good. They polish up your car to make it look extra shiny, even though there may be junk under the
The hood.
hood. What matters is your return size and how long you're holding it for. So again, let's quickly debunk the profit factor myth by breaking it down. I'm going to walk through the same exact example, Trader 1 and Trader 2. After 100 trades, Trader 1 wins 99 of them, Trader 2 wins 60 of them. They both put 1,000 in each. Trader 1 makes 5 grand, Trader 2 60 grand. Here comes the losers. Trader 1 only has one loss. Trader 2 has 40 losses. But at the end of the day, profit factor looks way better for Trader 1 than Trader 2. But the truth is, Trader 2 made 5 times the money. Trader 2 is 5 times more profitable with a much uglier looking profit factor. So, of course, you don't want a profit factor to be below 1. That would be unprofitable. But isn't it actually shocking that a strategy with a profit factor of 1.5 can actually be 5 times more profitable than one with a almost 5 profit factor? Do you agree in the chat now? Yes or no? Hopefully you can say yes after that. And also, who here ever knew this, or who here just assumed the bigger the profit factor, the more money you made? I know I did for years, and I literally mean years.
I did.
Now this
I totally bought it. But Graham, we should maybe follow up because I do want to mention it works the other way too, right? You could have a great risk reward and think like that's going to make me profitable, and have a negative risk reward and think that's bad. But if your win rate's better, and like so it goes both ways. Risk reward also doesn't mean anything on its own too.
Yep, same thing here. It's all about the size, the average return you're going for. If trader A is going for tiny gains, but he barely loses, great profit factor. Trader B is going for those bigger gains. He's okay to take those bigger swings, bigger losses at the end of the day. Lower profit factor, but again, here, Trader B is 10 times more profitable, even though he's got half the profit factor. So there's nothing wrong with knowing the profit factor, but it's not an apples to apples metric. So how can we compare which of our strategies are better than others, or which ones are performing the best in real time? Well, we want to answer the question, which strategy can actually grow my $1,000 or insert the amount you trade with there the fastest in real life? And the answer is not profit factor. It's not win rate. It has nothing to do with that. What we want to see is the total profit over time, the growth with the capital at risk, and two important things that factor into that is hold duration and trade frequency. Now, the way I like to calculate it right now is the compounded annual growth rate of an account, but it's still not perfect. And I admitted this on Monday when we went over this. I don't have a perfect number for you guys for an apples to apples comparison, but the compounded growth rate, if you do the same same allocation size in two different strategies just to compare them apples to apples, you can get a good idea of which one performs better. So I'm
Yeah.
going to use a few of mine here for an example and compare them apples to apples. So here's my perfect Bitcoin trade and my perfect income trade. You can see here with the Cager, 241% on perfect Bitcoin. That's incredible. Perfect income, 111%. That's also incredible. But here you would say the perfect Bitcoin trade is better. However, this is
Right.
skewed because we want to have the same apples to apples comparison on the percent allocated into each trade. So if you're starting with $1,000, this one's using 200 right now. This one's only using $50. So when we scale those together and make it instead of 20 and 5, we make it 20 and 20, apples to apples. Well, now all of a sudden the numbers change. Now, when we can see it eye to eye and the same, perfect income trade is absolutely crushing it.
Wow.
Absolutely crushing it. Now, of course, you can play with these numbers, but I like to keep them apples to apples when comparing a strategy. So that's doing really, really well, and it changes everything about how you compare. Now, I did make a calculator for you guys. I'll throw it in here. I don't know if we got it updated in the members portal, but Deanna, Blake, if we can get that in there after, let me just Slack everyone so I don't forget.
So Graham, you had the percentage allocation and Apple was it lower or higher than Bitcoin?
Let me show you. This was a trick here to show you how you can skew it, but
Perfect. Yep, that's exactly what I thought. So do y'all see that? Very, very
Dude,
important.
we can't trick Lance. He's on
Yeah.
can't
it.
trick lands.
Do you
Yeah.
see that? How you don't have to bet a lot. And when you do bet more, like, some people put their whole account at risk or half their account, that's a no-go. If you
hmm
put a smaller allocation, so smaller risk per trade, and then keep going, Graham,
Oh, sorry. Yeah.
smaller risk per trade offers better, uh, I'll just say ROI long term. Better and easier to manage, especially if you're starting with a smaller account too.
Definitely is. So number two, like Lance said, allocation matters. You can actually, I made this calculator for you guys. I posted it in the chat here. Just make a copy, and then the things you want to change are these numbers. Actually, no, this doesn't have. Nate, we got to use yours.
My crazy one does,
Half
but
a
I but
percent
I
off.
ran into a few issues that
All right,
my brain has not figured out yet.
we're working it
Uh,
for you guys. But if you do get to like Lance says, if you're risking half your account, you probably have like 100% chance risk of ruin. Where if you hit three losers in a row, you're gonna have a 90% drawdown and never be able to recover.
And one real important factor that the profit factor and all that kind of day trading stuff doesn't take into consideration. People say, "Oh, I have a 99% win rate and a high profit factor." What they don't account for is human emotion. And we're all
Mhm.
humans here. We're not robots or AI, stuff that when you do have human emotion involved, so when you're making the decisions, humans have the emotions, computers don't. So there is times where you're going to step outside of those boundaries, and that's how you get those big hits or those blowouts. So if you're like, hey, I have this and I'm doing everything the same and using all that, and this has a high profit factor and 99% win rate, blah blah blah, that is just strictly computer math. It doesn't take into
Mhm.
consideration perfect entries, perfect exits, and then the human aspect of seeing drawdowns and how that affects your emotions. So, what is the answer?
Well, we know it's not win rate, right? Win rate means nothing. The guy that wins 20% of the time can make 10 times more money than the guy winning 90% of the time. And as I showed you, it's also not profit factor. Now, I have to be honest with you guys, I haven't found the answer just yet. I'm on the hunt. I'm hopeful that we will find it. But even Google and ChatGPT and everyone else doesn't seem to have the answer either. My goal is to eventually find a perfect metric for scoring strategies side by side. But these are the key metrics you want to know. You want to know the average percent return. Like I said, size is the most important thing. How big are your winners? How big are your losers? And when you average it out, what does that number look like? Like I showed you there, the person with a 20% average return is absolutely crushing it. Another thing is how long are you holding it? If you're getting an average return of 20% in a year, that's solid. But if you're getting an average return of 20% overnight, that's obviously much better. So you want to know the average hold time and then the frequency of the trades. Now, generally speaking, let me just move this down here. With the average percent return per trade, the bigger the number, the better the strategy. Hands down, you want that number to be as big as possible. However, just because one strategy has a bigger average return than another doesn't make it a better strategy because you also want to know the hold time. Like I said, if it's a year hold time compared to 1 day, well, that's a much, much different comparison. So the average hold time, the smaller the money, the smaller the number of your average hold time, the faster you can scale an account, and then the frequency of trades. Now, this one's a little bit of tricky because this one's a little bit tricky because just because you have 100 trades in a day doesn't mean you make more money because that would take more capital. In my opinion, the most perfect combination you can get is if you have a 1 week average hold time, you take one trade a week. Now, if you have a 1 week hold time and you take 2 trades per week, that's no problem. You might smooth out your growth curve a little bit, but you're not going to be able to scale any faster. You can't get over that 1-to-1 ratio because it just takes more capital. One that's going to give you slower growth, however, is if let's say you have a 1 week hold time and you only take one trade per month. Well, I mean, you're sitting on the sideline for 3 weeks out of that month, and you're going to see slower growth. Same thing. Let's just look at a daily. If you have one trade, if you have a 1 day hold time, you only really need one trade per day to max out scale. Again, if you have 2 trades per day, no problem, but it's not going to really increase your growth rate if you're holding both at the same time. However, if you have a 1 day hold time and you're only getting one per week, again, you're going to be sidelined too much and see slower growth. So again, the most important factors to me, average percent return, winners and losers on average. Don't let someone just tell you the winners. You want to know both. Average hold time, how quick are you getting that return and how often does it happen? Well, Monday, here in the opening playbook, I'm going to share with you my number one strategy that encompasses all three of those elements. In fact, the average return is about 32% per week. It's actually 32.0%. So it's right on the dot, 32% per week. That's not just the winners, that's winners and losers combined over the last 18 months. Again, the average winner here is about 100%. But when we take the winners and losers, 32% each and every week, one trade a week. Now that's like 3xing the S&P's annual returns every week. So that's when we can really see that scale there. Now the secret to it is it's a numbers game. It's a unique way to rig the options market. I really do think rig is the right term for this and game the whole system each week. Monday, I will show you everything. And I think you'll be pretty shocked about how these options work so far. And these are on the live published trade shared with you guys. No compounding. If you started with 5K and didn't compound, $140,000, $140,788.74 in net profit during about 18 months. That's including the losers. That's not just showing the gains. It's got a profit factor of 2.08, which you might hear 2.08 and think, oh, that's not so good. But remember, I showed you that means absolutely nothing because our average return is 32% a week, and we get to do it every single week and letting it go, just sticking with it, rigging the markets like we do, gaming the options market, and just taking this trade week over week has paid really, really nice. In fact, it's been my top performing one for years. And if you were to cut that down, that's about 70K per year in profit with 5K starting out. And you don't need 5K. You can start at 1,000 and cut this number by 5, or start with 2,500 and you're at 35K per year. But it's really, really something. And again, we're just gaming the options market to get that trader two mentality that I showed you there earlier, where we're getting 5 times the payout that someone with a pretty win rate and pretty profit factor might be getting. So if you want in, go ahead, give me a yes in the chat. I'm just going to post a link here. There is no sign up page for it. It's going to be here on the opening playbook. So I have posted a link, and I think you guys may have just overwrote me with all the yeses.
Well, you asked for yeses. You got a lot of yeses.
I know. I this time
Yes.
that one. Sign up for the opening. Just make sure you're on the opening playbook list. Make sure you're here Monday. I'm going to walk you through it all step by step. And again, it's not like your typical swing trading technical indicator sort of approach to the markets. It's just mathematical odds using it to game the options market, where we're able to be like Trader 2 over and over again. So make sure you're there Monday. And that's my little spiel for you there.
Well,
Awesome.
before we get in, I know how much you guys are still waiting. If you're not in overnight options yet, to get your chance for today's overnight option trade, which, as we said, going into tomorrow's most bullish day of the year. So obviously want to take advantage of that. But like Lance said, Doesn't mean you go all in on one trade, right? You got to be consistent with your capital, even if you think it's going to be the most bullish day of the year. But before we jump into this, I will pull it up here in just 2 seconds. You guys can just hang tight, and we'll give you a chance at overnight options before today's trade, which will come out about 3:30 p.m. I want to just quickly go back to what Graham said. Frequency matters, right? So if you put up another slide and said, which is better, to net average out and make 3% a day, which doesn't sound that exciting, but if you average out winners and losers and you make 3% a day, or you make 25% a month, which is better. It's 25%.
Month.
25% sounds good, but you make 3% a day and compound that, you're going to absolutely torch, 20%. So that's kind of like a 4 p.m. payout mentality or an overnight option mentality. If you can net average out a daily, it doesn't mean you're going to make 3% every day. It means you're going to make 17%, 22%, 28%, then lose 80%. But over time, you average out a good daily ROI. You keep your capital consistent. You recycle your capital. Then obviously those daily opportunities stack up. So the way that I do that is with overnight options. We'll play it right here if you guys want to get a crack at that before today's trade. And fingers crossed that tomorrow holds up and is another bullish day like it has been. What do we say? 74% of the time or something that number was. So not that we need a bullish market to win, which like Graham said, hey, we'll take a boring market that doesn't do a whole lot as well. That'll work too.
And Nate, just to reframe that methodology, that math, in an apples to apples comparison, 25% per month or 3% per day. Well, if we're going to make it apples to apples, let's say you get 20 tradable days in a month, because there's obviously weekends and some holidays. At 3%, no compounding, you're looking at 60% a month. That's no compounding. Imagine what happens if you scale up a little allocation. You're going to get way, way, way above that. So obviously your 3% a day is far better than 25% a month. I'd take that all day, every day.